Microsoft is to buy the professional social network LinkedIn for $26.2 billion in cash. That's $196 a share for LinkedIn. In a mutually agreed deal, the transaction would be one of the biggest that Microsoft has ever done, and LinkedIn would continue to operate as its own brand. The deal, as well, will close out by the end of the calendar year, according to those within the transaction. It's also been announced that LinkedIn boss Jeff Weiner will stay on in charge and report direct to Microsoft's chief executive Satya Nadella. There's a certain logic to this, but for us it's all about how to trade the deal. Chris Beecham's with us with some more analysis of this. Quite extraordinary, as we were just talking about. No one knew about this before it hit the wires, and we've seen some interesting reaction. Let's take a look first of all at Microsoft.
Yeah, the share price of Microsoft down about 3.7% so far. It was, of course, suspended pending the announcement. You have seen Microsoft shares fall back from this multi-year high we had in December and also in April at around $56 a share. The question is now, does this deal mean we might start to see the beginnings of a recovery? I think it's interesting the way the shares have come back towards this $50 a share mark the last few months. You can see in February, in May, and now today as well. So if we start to recover from here, your next target might be initially sort of about $53 a share, and then on to that 56 high above we saw in April.
And of course, Microsoft, like LinkedIn, is an all-session stock on the IG platform. We take a look at the LinkedIn share price. We've obviously got this massive, great big gain that we've seen in the stock as it approaches $190 odd a share, which is what the deal is all about. But LinkedIn was already trading on quite a high multiple.
It was trading around 37, 38 times forward earnings. It didn't make any money last year. Now, if you add about 50% to that, so LinkedIn starts to look a bit pricey. The share price reaction, understandably, around 50% higher so far today, and that's sort of recovered all that big drop they had in February when they last released earnings that were a bit dire. So clearly, LinkedIn shares obviously a limited lifespan now once Microsoft takes over, but you might start to see perhaps them just push a little bit higher for the time being, unless of course someone else comes in maybe and offers a larger amount of the shares and kicks this M&A deal back into touch.
One wonders as well whether or not this is maybe going to open the floodgates for other sort of deals around this sort of area, because these social media networks, a lot of them don't actually earn money. I mean, Twitter is the big one in question, of course. Will a company be now hawking around that particular stock?
This is definitely the one to watch out from. Facebook as well. Twitter's done not very well at all in terms of share price, continues to make new lows, whereas Facebook has done better and better. So maybe we'll see Twitter gaining hopes of a bit of coming along and Facebook declining, maybe an expectation that they'll just be one of those left out of the general party in tech stocks at the moment.
Yep, OK, so that's it then. The deal there is announced today, and it's an agreed deal, so it's all going to go ahead, and expectation is it'll be done between Microsoft and LinkedIn by year end.